What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is May 13th of 2022. Well, folks, I hope you're having a better day wherever you are as crypto markets start to rebound from their capitulative lows, as we've seen Bitcoin rally from $26,000 upwards towards the big even level of $30,000, with Ethereum and altcoins recovering a lot of their capitulative lows from over the past 48 hours. So one of the questions I'm going to focus on here today, though, rather than just talking about the rebound of the market, is talking about a very important point, and that is why it is not time to panic in the market. Not only not to panic sell, but also not to panic FOMO into the market, right? And this is, again, a pretty neutral take here that I want to emphasize here, and an emphasis on understanding that volatility can persist in the market, okay? So without further ado, let's go ahead and dive into it. Now, I want to first start off with the narrative and the important topic that I think many of us can relate to. Most of you watching the channel here are exposed to cryptocurrencies. Some of you might be in stable coins, we'll get to that in a moment, but most of you are probably in positions right now to the market. And all the while, I can understand that it's been a really frustrating time. I know it's been difficult. It's been a brutal correction for sure. I want to go ahead and share a perspective that I think is really important to understand. No matter if you're in the seat where you are a long-term holder and you do not want to touch your crypto, in that case, you already know where you're at in this case. You're long-term, you're focused on the long-term. But I know a lot of you are in this case more swing traders or people who think, hey, look, maybe I'm really up on my money still. I've lost some of my gains, but I want to take some profits off the table. Or maybe you're at a loss on a position, right? If you're in those shoes, hear me out on this. There's a really interesting way to look at markets beyond just trying to label whether or not we are in a bull market or bear market. I've emphasized many times in the channel how that's really not a productive train of thought of thinking, what is a bull market? What is a bear market? What are we in? Because labels will get you sidetracked from actually figuring out, am I in a position that is in a good position to sell, or is maybe, for example, a good time to enter into the market? Maybe is it a favorable discount valuation? I want to go ahead and emphasize here another way to view markets and really take a look at Bitcoin corrections. Now, we have seen both in official bear markets and also during bull markets a variety of corrections, right? We see them all the time here. Now, in the case of bear markets, when we really start from top to bottom, usually it's a total of an 80% decline from the all-time highs. That's one way of looking at it, and you could look at the total returns of a bull market, but in between both, there are excessive corrections, double-digit corrections for Bitcoin's price. And I think using Bitcoin as a benchmark here is really interesting because we can see here that just in the past year and a half here, we've had 3 substantial corrections that most people will point to. We had the correction back here in May, correction in November, and I want to propose a perspective here of the top to bottom correction from the recent price relative highs here in March, not the new all-time highs, but just relative highs, where really we saw the trend reverse here and correct down over the next 6 weeks here, down towards 26K. We've also seen a lot of corrections back here during the bull market. What, again, I think no one would deny was the overall bull market for crypto. We had the rally from 3,000 here towards 14K, down here towards 6K, 53% correction, and in a matter of just 4 weekly candles coming from around $10,000 all the way down here to 3,900, a 63.5% correction. And if you go back here to the official bear market, from 2018 down here to turning towards 2019, we had not only a 53% correction, a final capitulative sell-off over 5 weekly candles, but in 8 weekly candles at the peak blow-off top of the market, a 70% correction for Bitcoin's price, okay? Now, all the while, the percentages will vary. The one important thing that I emphasize from this point on where we are in price, from this 40% plus decline, it is not a favorable time on a risk to reward perspective to take all your money off or take your positions off the table and take what you can get for your positions. Even if you are a long-term investor or someone who wants to take your positions out of the market and go back into stable coins or dollars and just step away from crypto for a while and wait for a better trend signal for potentially a bull market, if that's the mindset you're in, it's best to wait for a rebound in prices. So I want to go ahead and emphasize this here. Again, from these kind of capitulative lows, what you find afterwards, I mean, if you really even, for example, think that this is a bear market, once you get these kind of huge wick rebounds here due to capitulation in price where, you start to see here, and we'll actually just go ahead and zoom in so you guys can see this a bit better. Let me go ahead and bring up the daily chart. You guys can see here, as price rolls over, you get these capitulative lows, and then you get a really nice solid candle rebound here with a very tall wick here in price. Look kind of familiar? Well, that's kind of what we're going through right now. as we came down to 26K. We had a multi-$1,000 rebound, double-digit percentage gain for Bitcoin from those lows, and now it's starting to hold ground well above from this previous low range. And we can see here that afterwards, Bitcoin rebounded all the way from these capitulative lows at around $6,000, a little under $6,000, all the way up towards nearly right under $12,000. A 100% move recovery back in price. It didn't get back to the all-time highs, of course, bear in mind. But it is important to note here that selling at those lows, you'd be at a much worse off position, thinking with emotions, selling dramatic amounts of your positions at capitulative lows, than you would just simply waiting a little while for the market to rebound, for market order flow to take back over. And again, no matter if we are in a bull or bear market, in a bull market, of course, you would see a continuation here, would start to trend higher. Either way, our goal here, if you really want to step out of the market, would be to take some profits off the table here when you get that rebound in price. Now again, I can't tell you all exactly what that level is going to be. I can't tell you again like the absolute magic price. I think anyone trying to preach that is probably talking a lot of nonsense. But the key thing here to focus on during these times of volatility is to wait for some type of move back up to the upside. And I can guarantee you most likely that it is not going to come here in the next 5 minutes. It's not going to come in the next 24 hours. It'll probably take a couple days. You just got to wait a little bit, be a bit patient, stomach the volatility, because the market right now is trying to see whether or not it can turn this range. We've seen obviously the market order flow bring price back up a couple $1,000s. We need to see if we can regain 30K as support and see whether or not this is the overall end of the sell-off here. Right? That's something we've just got to be patient on. We have to wait for price to hang around this range, because if we, on the other hand, see a rollover here, where all these gains fade here, this 4.75% return we've seen here on the daily candle from the wick here that we expanded on, right? If we see this rollover, that's probably a sign that prices have still got a ways to go down, right? Or at least they're going to come back down to this range here, around $25,000, $26,000. So this is why, again, I emphasize not also to just FOMO. And again, if you're a long-term investor, yeah, this is at the discount range. You would generally dollar cost average. But again, if you're looking to make like a big size position and really get in at a good price, again, this is a nice discount range, but you might want to wait again to be able to pick up on those capitulative lows, setting in some limit orders, getting them filled, etc. So the key point here, again, more of a leaning emphasis here on the fact that right now, historically speaking, when you get in this 40-50% range, you're likely towards the tail end of this. It could get a little bit worse. We could come back down here. That's again at the point I'm emphasizing here, that we're down about 47% from this range. It could get down to 50%. It could go a little bit worse. But again, this is not the time to absolutely panic sell, right? Wait for that capitulation. Wait for that rebound, even if it's a dead cat bounce or a recovery back. Eventually, over months to a year for new all-time highs. Doesn't matter what your bull market, bear market perspective is. It's a matter of picking up the fact that we are in a capitulative period. You do not want to sell into capitulation. Wait for a rebound. If you've already gotten caught, in this case with the correction, don't get caught 2 steps behind. That's the key point I want to emphasize, guys. I've seen it pain too many people, and then they get into basically finding themselves in a trap in this case where they're buying high into FOMO, selling into fear, and it's the opposite of what smart money is doing, right? Again, no matter if bull or bear market, it's just something to keep in mind. Now, if we take a look at price here again, and you guys know we've been taking, to be honest, more of the optimistic perspective in the market, and to be honest, the market corrected definitely more than we thought we would. We thought we were going to hold at the 30K range. We came down here towards 26K. And all the while, I love seeing the rebound here in price. I love seeing that we did get some more follow through. I was a bit worried about the shakiness in price on our last video. To be completely honest with you all, I'm not 100% sold here that we're just going to see a vertical rebound. There might be some chop here in the market, especially with all that's been going on, especially with UST, and also seeing what the NASDAQ is going to do. That is going to be the big kicker here. Will the NASDAQ continue its rebound that we saw towards the close yesterday? And I think it's the same case here for Ethereum. If we take a look here at the hourly chart, right, we've made some great recovery here, but don't be so eager to FOMO into the market, because what we need to look for here is what the NASDAQ is going to do here at this range here, around 12,200, the NASDAQ 100. right? This is a range of previous resistance in the past. We have now dipped below it. We weren't able to make it support. So price needs to reclaim this territory. For now, we need to interpret that until price can really set a daily closer to above this range, that it's going to act as resistance. And that's an important point to keep in mind. Even though we're long-term, we're bullish on crypto. We love it as an asset class. At the same time, we need to be realistic that the macro conditions are a bit uncertain. And this is really a pivotal point here for the NASDAQ. And the reason I say that is because, and again, this is like also why we don't absolutely panic sell our positions. You can see here that we've had a near 30% correction in the NASDAQ. Now the S&P 500 and some of the other indices maybe haven't seen it as bad as tech has, right? Technology, which is what makes up the majority of the NASDAQ. So that's one thing to know. But seeing that we've already gone through a 30% correction and we're coming down towards a very significant historical range here, right, which has been previous support and resistance in the past, this is not the time to capitulate. We wait to see here what's going to happen, because if this is starting to act as long-term resistance here and price really starts to chop in this range for a while and break down below the lows, that's going to be your telltale sign that we're going in for a much broader correction, that the Fed is probably going to continue quantitative tightening. It is going to be rising interest rates. Capital will probably flow into a variety of other asset classes, or just people will remain in cash and assets will see a net negative outflow or market order flow. And that means equities are going to probably go down, and probably crypto. And that would be where you get your scenario, what people have been talking about, where we would come down to something like 20K for Bitcoin. Again, I really don't see that as a probability. I think that, again, people understand that the Fed likes to talk a lot. And again, with the inflation metrics that came out just the other week and stuff, we're not seeing the expansion double-digit territory like we were expecting. So again, let's just wait and see what happens here. This is an important point of contestment. If we can clear through here and make this range support again, the NASDAQ could start to rebound here. The market could start to swing higher. People could see equities at a discount valuation and take the opportunity. I'm not saying that's what's going to happen, but we need to wait for this range here. We need to be patient and see what happens with the NASDAQ. I'll tell you all one thing though, and this is again back to this point here about capitulation and selling into dramatic lows in the market. I can't tell you all where Bitcoin's going to head here. It's going to be volatile. It's going to be choppy here for the next few days, maybe even for the next week or so. But there is one chart that has really stood out to me here in the market. That all the while during this selling here, people constantly charted the idea that, the whales must be selling, right? Those who hold large positions must really be dumping onto the market. This is the metric on Glassnode that looks at the number of addresses with a balance over 10,000 Bitcoin. To be honest, some of this is exchange wallets. That's an important thing to understand here. But if you take a look here from the heightened range here, right? The peak of the market here, where again, over these past few months, through the pattern here in price, we've seen distribution, right? Large whales unloading their positions at these highs. As we go into the capitulative lows, the amount of whale addresses has spiked up big time. Just in the past 2 weeks, we've gone from 89 addresses to 94 that hold over 10,000 Bitcoin. I'm just going to go ahead and zoom in so you guys can see this here. Huge spike up here into capitulation. And I think that that's a telltale sign here that we shouldn't be too worried about the current state of things. That we just got to be able to take a breather here. And I want to speak again on a personal note, guys, that I understand firsthand how difficult it can be, depending on where you are, financially and stuff, and how exposed you are to crypto. And if again, you guys need some guidance on that, I recommend watching the last video again. I can never give you guys direct financial advice, but I think that I can at least help you guys to understand again that this is part and parcel with markets. It happens. And if you're in these shoes and stuff where the markets hit you hard and stuff, I want to say I'm right there with you. We try to keep our expectations as rational as possible here on the channel. Again, we made some great calls. To be honest, we didn't see the correction getting this bad. And I'm going to try to reflect on that. I'm going to try to learn from it. And I hope all of us can at least try to learn from the market and see in this case, that we probably need to focus more on what we used to talk about a lot here on the channel, which is that macro perspective, really following what the Federal Reserve is doing, and whether or not the Fed is really sticking course here. And I think one of the best gauges we can use for that And I think in hindsight, one of the things I learned a lot from is really following the treasury yields on government treasuries, in this case, US government bonds in a sense, and following what the market is telling us that the Fed is actually going to do. It's really interesting to kind of step back in that macro perspective, something that I'm much more familiar with because of my background in equities. And I think we're going to talk a little bit about that more on the channel. If you guys would like that, if you want me to kind of step back in that macro perspective, cover some of those other areas, definitely let me know down below in the comments. I want to hear from you guys. And maybe some other avenues or areas to cover here on the channel. And last but not least as well, if you guys like this video, if you found it helpful, definitely consider dropping a like. It's one of the best ways you can support the channel here. So anyways, guys, that's it for today's video. I'm glad everyone has at least gotten a bit of breath of fresh air with the market rebounding here. But again, I want to encourage you guys to be ready to stomach a bit more volatility. Just in this case, it could mean prices just etching within the same range that we're in right now, between this 26 to 30K range. Just be prepared for that. And I would say wait for higher prices here in this case if you guys are really exposed to the market. Don't find yourself getting knocked out in the capitulation. That's it, guys. Thank you so much for watching, and I'll see you all in the next video. Take care, everyone.